On the 9th of September this year, the Institute of Public Policy Research, a left-leaning think tank with past links and probably current links to the Labour Party, put forward a set of proposals in a document entitled Just Tax. The underlying premise for that is that it is profoundly unfair that income and gains derived from wealth should be more fairly taxed, or should be more lightly taxed than income from employment, from working. So that it's unfair that income from working should be more harshly taxed than income and gains from wealth. Now, the proposals they put forward are quite radical, and they do not represent official Labour government policy, or the policy of any government for that matter. But given that John McDonnell has spoken at a past IPPR event, at least one of them, and they do have historic past links to the Labour Party, then it wouldn't be a total surprise if the Labour government looked to some of those proposals to inform their proposals, which we will eventually, I suppose, see in a manifesto, and maybe even the Lib Dems too. It's probably unlikely that the Conservatives would take on many of these suggestions. So what are the suggestions? So let's look at income tax and then capital gains tax, the two key taxes they looked at. Income tax, they felt, first of all, that because of that profound unfairness of the taxation of income from work and income from wealth, that actually there shouldn't be a different treatment for any income. All income should be taxed the same. And while we're about it, in relation to national insurance, it is just another tax. So why don't we just not call it national insurance and just fold that into the overall tax rate? Also, let's also look at the fact that the way the tax bands go at the moment, there are kind of cliff edges that a rate kicks in once you reach a certain level. And they propose a much more gradual movement of the tax rates through from the basic rate, which, by the way, if you fold in national insurance, starts at 32% and moves up to a 50% rate at £100,000 of income. Remember, that's income from any source. No dividend allowance, none of that going on, no savings allowance, just income from all sources taxed at those higher rates. And at a 50% rate would kick in above £100,000. Stress again, this isn't official policy of anybody, but it is a set of proposals that have been put forward that some parties may well look at to inform their manifesto. So that's on the income tax side, we're looking at higher rates, including a national insurance into the overall rate, and perhaps most fundamentally, all income being taxed as one. No differentiation between investment income, savings income, and earned income. Then we look at capital gains and go, actually, why should capital gains be treated any different to income? So their proposal is treat the capital gains as income. So what we're seeing now is investment income, savings income, earned income, and capital gains all taxed at the same rate. So your capital gain will be taxed as income when you make it in the year, no division by the number of years you've had the gain, no specific reference to life insurance policies, by the way. So this is, more fundamental stuff, looking at broader principles. So put the capital gain in, no wipeout of past capital gains for tax purposes on death, so no rebasing on death. The annual exemption falls away and you just have a de minimis exemption of £1,000 under these new provisions. I said no wipeout on death, and the wipeout of all reliefs like for EIS and for entrepreneurs relief, yeah, that all goes as well. So that's quite a radical set of proposals to lump together, which would completely reshape taxation. By the way, on capital gains, they did actually say that we should look at introducing either indexation relief or a real rate of return relief linked to government bond yields, and they're quite low at the moment, so one might expect them to go for that one rather than CPI. Taken together, net of indexation relief or a real rate of return relief, then these proposals would, it is estimated, yield the government between 40 and 50 billion extra pounds, and that's before even looking at any pensions relief. So 40 or 50 billion pounds, you could do quite a lot with that to change the shape of the UK. The FT did a report quite recently showing that if you looked at the 2017 Labour government manifesto, then at current rates it would take around 26 billion, I think, to implement those changes. Now, they may have different thoughts about what they would do now. They may be more radical or less, I don't know. But if you've got 26 to 30 billion of cost and you can generate 40 billion by this big change, you might expect a government to go, actually, we'll have a look at that, see what we could do. So what does that mean right now? Well, at the moment, it's just speculation. It's a think tank that's put forward some proposals. It isn't official policy, but we couldn't discard it altogether, given that IPPR proposals have been looked at in the past by Labour government, and also the Lib Dems at their conference, in a paper that emerged from their conference, indicated that they agreed with a fair chunk of those proposals, taxing all income the same, for example, minimising the more attractive treatment of capital gains. So any Lib Dem influence is likely to go along with any change that was aligned to those IPPR proposals. So we're not saying they're definitely going to come out, far from it, but they are out there. Okay, so your clients, if they, of all of this speculation around what the future government will be and what they'll do, no one really knows. But one fact that is true is if you have reliefs available to you at the moment and exemptions available to you at the moment, and you have the wherewithal to use them, and it's appropriate and relevant for you to actually use those exemptions, the only reason you're not doing it is because you haven't got round to it yet, then given the current febrile state of everything and the fact that we are going to have some kind of change relatively soon, which may not result in tax change immediately, but probably quite soon, whichever party gets in, then use those reliefs now. Think about using them now while you have them in their current form. There's a lot more on this on TechLink, by the way, so keep track of all of these developments within TechLink.